So now we're going to take a look at SPY. It's always interesting to see what happens after a weekend. You can see I've updated the actual component here. I need to make it better. It looks kind of ugly in terms of the way it opens, but I do think it just looks much nicer. I think it looks much nicer. It might actually make bullish white though. I think that would make a lot more sense. Nice up day. We saw some great return. What I do like about what we saw is I think the bottom of the range pretty much stayed the same on SPY, but it looks like this price went up, which is really good. So we get Qs. Qs had a very nice day. Still needs to get above 187. Still definitely needs to get above 187 or 487, excuse me. If it gets above 487, I think we are in a much better place. Let's look at the DIA. It's been really interesting to watch the Dow. The Dow has had a remarkable run considering the fact that it only has 30 stocks and it's really not tech heavy. It continues to show that there's essentially like a broad kind of move in the overall market itself. Look at RSP. This is the equal weight S&P 500, which I really love to follow. Yeah, this is having a nice move. It could go all the way up to 172, but yeah, it's at the very top end of this range essentially. The bottom of the range really has not moved. That's what's really interesting about most of these things. Let me look at IWM. How is IWM doing? Is it really holding this 220? I was really expecting it not to, but I do expect, I guess, that if I think about what is most likely to happen for the rest of the year, you're probably going to expect that there is going to be, I mean, I've thought about it from July, or no, not even July, from January of this year. I think there's essentially going to be like a broadening. And why would there be a broadening? A broadening makes the most sense because if you look at the way the market has been trading, the market's been trading, attempting to hit to all-time highs, while essentially wanting to give it all of the worst news that you could ever ask for. And when you think about the type of things that you're looking for in a real bull market, a bull market is one of those ones that is hated. A real bull market, people don't want to buy. A real bull market has pullbacks that people are like, oh, that's the dip, that's the real one. And the people who get rewarded are those who not necessarily are early, but the ones who are the real early believers and say, I think there's an expansion happening. I think there are higher wages coming. I think there's an expansion in credit. I think there's a catalyst inside of an economy. Like, look, you're seeing higher highs across the entire board for every single ETF, which is US based. I mean, you're not seeing higher lows, but you're seeing higher highs, which is a very good signal. Let's look at emerging markets. Emerging markets had a very nice day, also a higher high. It really looks like I'm imagining what we're going to get to, by the way, when you look at the dollar, which is coming up pretty quick here. I think the dollar is going to be absolutely destroyed today. No idea just yet, but I can see that. Oh, China must have had a really good move. Do I even follow China in here? Yeah, I do. I follow China down on FXI. Now we're at UUP. I bet UUP was down. It had to be down quite a bit. Down quite a bit. It's down friggin' 2 cents. Either way, it's bearish. You can see that you've got the dollars incredibly bearish here all the way across the board. It's already done at 28.51 is the bottom of the range. I love to see that the range continues to drop, right? It was at 28.62, then 28.55, then 28.52, now 28.51. The dollar essentially is the new shortable opportunity across all of the market, which means that all stocks are a buy just across the board. If you're pricing dollars, bonds, not bonds suddenly have gone bearish. Very interesting move. That, boys and girls, is one of those things that makes you take note of not just bonds, but gold. We're going to look at the shorter end of the curve here. We can see, even the shorter end has gone long or has gone bearish. It's not great. When I say long, I mean the yields are rising, not necessarily that the price of the bond itself is rising. If we look here at SHY, this is the really short end. Yeah. I mean, you have a little bit of a rise, but people are really expecting a cut here. People are, yeah, higher high. I was gonna say people are expecting a cut, so people know that the short end of the curve is it's gonna be dropping no matter what. FXI, let's see here. Yeah, I mean, this doesn't look like a big move, right? You're just back in the proper middle of the range with it being green, but that is a big move. I mean, that's a nice move if you're thinking about it being like 50 cents. That's a nice move. We're looking here. Yeah, I mean, you still got to get above 26, 60, or 42. Again, the 20-day moving average is really one of the ones that you want to respect the most. Why? The reason is because that's just where a lot of the people use volume weighted like price. They use volume weighted like whatever, all these different things. It just looks like a 20-day moving average when you really break it down. 20, 30, 50, whatever your moving average is, that's essentially what it looks like when you look at your volume weighted of anything. It essentially tracks very similar, but I understand that there is a Yikes, oil. Oil just continues to actually show that it may actually be bearish, which has been a transition. Oil may actually be bearish. Actually, here's what I'd say. Oil may be bearish for the next 1 to 2 months. I expect that sometime in the next 1 to 2 months between now and I'd say Labor Day. Labor Day is probably when you're going to see some sort of move in oil. Maybe in the middle to end of August is when I'd expect it, right before Labor Day. If we look at gold, gold continues just to have a nice move, just a very healthy, just a healthy move. I mean, it doesn't show it specifically there because on the 19th, I guess it was, yeah, well, see, the thing is, gold isn't showing a healthy move if you look at it over the past 2 days, but if you look at it from where it was at the beginning of July, right, it was at 215, and then by the middle, it was at 223, 223, 228. Now you're at 221. That's a really healthy move in under 21 days. Let's look here. Let's just take a quick little peek. Personally, I do like being able to look just at the way that the overall trends are like moving. I mean, again, the 20-day moving average is a really simple one, but I do love the bearishness and the bullishness. It's interesting to see that we're seeing a breakdown in what appears to be oil and in silver. Looks like the commodities are just breaking down. Commodities are just not having a great go of it right now. It's interesting too because the dollar's breaking down. You normally would expect commodities break or to have a breakout when the dollar's breaking down, but sometimes correlations get a little nuts, and I do think that this might be a period of time where oil could be setting up for a much longer term. But look at Bitcoin. Bitcoin is just starting to really turn a corner here potentially. I mean, it's at near the top of its range. It's definitely becoming one of those things. It's like, okay, I should be buying Bitcoin. I should be paying attention to it at least. If you don't own it yet, I guess. If you don't already own Bitcoin, you should definitely be paying attention. If you're thinking about it from just a trade perspective too, it's looking very, I mean, it's obviously been on a move. And ETH here, would love to see what's going on with ETH. Let's look at Apple. Apple continues to just be a darling. It's like a returning champion. It is because it was bearish in all in here in March. March going back to January, it really became bearish at the beginning of January. January 2nd, it went bearish and it was bearish all the way down to 169 here in April. I mean, that's 4 months. It's 4 months of true bearishness, and the returning champion is just coming back with a true vengeance. Where what I love, so when you get the flip, what I'm personally looking for is I'm looking for these higher highs. I mean, that's why I noted out. I think the higher highs, the higher lows, and just being generally bullish above the average. And then what you do is you just buy when it's in its green. You just buy when it's in the green. When it pulls back a little bit, it's in the green range. Just buy. Just let it go. If it dips, it dips. You can cut it, but it's essentially what you do. Buy when it's green. You can sell a little bit when it's super red. I mean, when you're hitting these numbers, that's when you want to just be pulling back a little bit. You can buy a little bit in here, sell a little bit in here, buy a little bit in here. So you want to be buying. Apple is again the returning champion. It has been on a bullish trend essentially in the long term, maybe on a quarterly or monthly basis, probably for like 15 years minimum, maybe 20. It's obviously had some down spells, but it's 2022 was difficult for Apple. I can say that. Let's look at Amazon. Amazon is interesting. Amazon is definitely interesting. If we look again at it, it's bullish. If you believe, just like I was mentioning, based on Apple, it's still bullish. It's below its 20-day moving average, which are getting higher lows recently. I'd want to buy it. I'd want to be an aggressive buyer of Amazon right here. This is a very good price. You haven't gotten this price since if you look back in like June. This is a very good price of Amazon if you believe. Amazon. Probably actually mark that down. It's probably one of the best to buy. Salesforce. Salesforce continues to just be surprising. Just comes out of nowhere and just really knocks the ball out of the park. I mean, suddenly back above its 20-day moving average. Um, yeah, back above its 20-day moving average, which is impressive to see. Just continues to do a good job there. What's going on with NVIDIA? This one, I have not paid attention. Okay, we're back in the low 120s. I mean, NVIDIA is giving all the sell signals. I can't even respect or argue right now that this might actually be something worth paying attention to. It's bearish. It's below its 20-day moving average. It's printing lower highs. I mean, you hate to see that. Like this top here is lower than the top back here at 138. That's a problem. That's a problem. Like, and I know that the data isn't really good, but you're looking at 137, 138, 137, 138, 138, 137, 137, 136. Now, tomorrow, if we have a really bad day, we could definitely be under 136. If we get below 135, oof, you do not want to see what that looks like because the amount of people who have got to be long NVIDIA right now, whew, there is enough volume there to really make a bad day for a lot of folks. Let's go ahead and look at Meta. Meta, bearish, 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 bearish. Also, just like NVIDIA, super interesting that Meta continues to be bearish. Meta continues to be bearish. I'm just surprised by it. Let's look here. Let's look for Google. Just I look at Meta and I look at NVIDIA and I'm just like, wow, that is not what people are talking about. People do not think that they're having a bad time right now. Look at Google. Google continues to be just an absolute stunner. Just a W. I mean, it's below its 20-day moving average, which is fine, but you're still bullish. You're seeing higher lows. You're seeing higher lows in the range. Like, that's huge. Higher lows, and you're below your 20-day moving average, and you're in the green. I mean, after breaking out of the blue, yeah, I would definitely respect the um, the look. This is a Google. I definitely respect the Google. Google looks fantastic. Google looks fantastic. Ooh, Microsoft. Also bearish. Also below your 20-day moving average quite a bit. And below the bottom. No, you're not below the bottom of the range, but you're not having a good time. That was a nice bounce, but that was not. You could have definitely, you deserve more. Let's look at Tesla. What's Tesla doing here? Tesla's got earnings apparently tomorrow. Oof, that's probably going to go. I don't know how that's going to go, to be honest. The range is just insane. They're at the top. I mean, the top of the range is $300. You're never getting there. I mean, maybe you could. Elon is a magician. You don't want to give. You don't want to count this guy out. UNH. What a absolute just. This thing is the breakout candidate. This is what's carrying the Dow. Like you wonder why the Dow is doing so well. Like I mentioned at the beginning, it's because of UNH. UNH is like, where did you come from? Seriously, where did you come from? You were at 515 on the 15th. You're 558 now. Like, where did you come from? Absolute. Yeah, best in class. You believe in the problem right now is that you have a divergence inside of tech. You have Apple bearish, Amazon bearish, Salesforce bearish out of the blue. You have NVIDIA, Meta bearish, or you have Apple, Amazon, and CRM bullish. Then you have NVIDIA, Meta bearish. You have Microsoft bearish. You've got Google bullish. It's such a dispersion between like there's so many different types of stocks that can do well right now. There's so many different tickers, so many different companies, so many different bases of individual like speculators who are just taking swings at things. And now that you have all these like short dated options, you're finding that these people can just move these stocks if it's hot. Like again, basic materials bearish. I mean, really? Just out of nowhere. Just completely bearish. Let's just clear that out quick. Let's look at XLC. This should be actually XLC. I don't think it's gonna be doing well because it's mostly Meta. Yeah, it didn't have a great day. It didn't have a huge day, is what I mean. It's below its 20-day moving average. It's still printing higher lows, which is very nice, but printing higher lows. Let's just do this. Go ahead. XLE. XLE, I'm super curious because I actually think that oil is going to have a very nice run because of what oil did, but oil's on a downtrend now, as I mentioned earlier. It's like great. But you are seeing higher lows in the bottom of the range, which is nice. Let's look at XLF. XLF continues to just do the damn thing. Like XLF is showing you that the overall market itself is doing well because you're having banks are doing well. And if banks are doing well, everybody's doing well. Look at XLI. Nice day. Very nice day. Industrials printing higher highs. I just love being able to see them put them up on the board like that with the higher highs, the higher lows, all that kind of stuff. Yeah. XLK. You had a big down move. Like you were at 234 on the 15th. You're now at 226. You were down at 220. God, I wanted to buy you so bad. I wanted to buy you so bad on Friday. I mean, I just bought growth, but just XLK was just a steal of a deal on Friday. You were paying attention? Absolutely a steal of a deal. Let's see, XLP, XLU, XLP looks nice. Overall, like the nice thing is when you're looking at the sectors, all you're really looking for is to make sure that generally everything is bullish. Because if everything is bullish, then generally you just want to be in whatever sector is bullish. You don't want to be in XLB right now, right? Like you want to be wherever things are good enough for the sector to be doing well. The sector's doing well, that's half the battle. If you're buying sectors that aren't doing well, you're really going to have a tough time about it. But if you at least know that the sector you want to buy in is having a good time, at least you're going to feel pretty good. Yeah, XLY. I mean, continues just to show its general strength. Let's look here. XLV. XLV is this is the one that I'm surprised about, but that's because you're seeing UNH. We covered it at the end. UNH is just wow, nowhere. Out of nowhere, dude. Absolutely out of nowhere. Wow. Tell me what you think in the comments below. I think this is a very good day. I think it was very interesting to see. Essentially, again, we have all these higher highs. We have all of these highs right here. So essentially, everything that's priced in dollars, right? The SPY, the Qs, the Dow, the equal weighted SPY, the small caps, the growth and value. You're seeing EEM. The thing that's interesting is you're seeing the Dow, equal weighted RSP, IWM, and the small cap IWMs. These are all two standard deviations above the mean. So you're seeing that they're all showing incredible like strength. I think you're probably going to see a rotation back to the cap weighted at a certain point, but it's very bullish if you want to just buy anything in the broad market itself. You're seeing anything X China here. You're seeing a higher low. It's the only one that doesn't have a higher high. EEM has a higher high, but I do think that X China might be useful. If we look at actual China itself, we can see China's still below its 20-day moving average. It's not showing anything incredibly promising, but it is bullish. The top of the range is at 2730. If we look at oil, oil does not look good. Oil's both of these are at like two standard deviations below their mean. They're both bearish. They're both near the bottom of their range, if not below it. Things are just not great right now in oil. I think again you could see this bearish for at least 1 to 2 months. I think it would make a lot of sense for this to be bearish until the end of August. It would make a ton of sense for this to be bearish until the end of August, and then you start to rally into the end of the year, especially through the election. Oof, what an election it's going to be! It's so much fun. Um, and then if you look at bonds, bonds are reflective of the fact that bonds are losing value right now, but that tells you that gold is probably in a very nice spot for consolidation. If you could see a nice down day in gold, get somewhere around like 215, 210, 220, or yeah, 210, 215, that'd be a great spot to buy. If we look silver's having a downtime. Bitcoin is breaking out. Yeah, Bitcoin. Yeah, Bitcoin continues to break out. We look at ETH, Apple. We've just got a lot. Like the tech sector is it's so broken out. It's so it really just continues to show you that there is not a monolithic tech sector and there are individual companies that people are trying to buy. The big breakout candidate for looking at these bottom ones is really UNH. Didn't even see that coming at all. Look, great opportunity inside of XLC, XLE, both showing consolidation essentially. And the higher highs are coming from, yeah, XLF, XLI, XLK. Yeah, just what you want to see. You want to see tech, you want to see industrials, you want to see finance. That's a good economy right there. I mean, it really is. Real estate will come in as rates continue to fall, but you just want to see like the real core of the economy, which is going to be banks, it's going to be tech. And now because we've got onshoring, you're going to see industrials. You know, I mean, that's if you're going to be honest about what you'd really be looking for, that's a great signal and a great setup for longer term growth inside of the US. But tell me what you think. I'm very curious about your thoughts. Have a great day. Talk soon.